Hi guys, Ben here and welcome to Motivation to Invest. Airbnb, DoorDash, all these EV SPACs, forget about those. This is the only IPO you need to invest in. So what's this company? Well, the company is called Affirm and I don't see anybody talking about it. It's a financial services company which could be the next Square. Now, although they do very different things to Square, they're targeting that Gen Z and millennial generation. So in this video, I'm going to deep dive into the company's business model, their major growth, their competitive advantages, and their juicy financials. In addition, we're going to look at the risks for this business, but it does look pretty tasty so far. But before we dive into that, if you're new around here, why not consider joining the investing family by hitting that subscribe button and turning that notification bell on. And if you want to take things a step further, hit that first link in the description below to be taken to the Patreon page where you can check out the VIP membership group. This is a special group I set up for like-minded investors where you can gain access to my buy and sell signals. So when I make my moves, you can make your moves. In addition, you can access my entire investment portfolio, my six-figure investment portfolio, and find out about the stocks and the story of how I grew that portfolio from just $20,000 to over $200,000. So first link in the description if you're interested in that. But with that being said, let's dive in. So what does this company do? Well, the company is called Affirm and they basically set up a system where customers can buy now and pay later for products and services. So let's say you want to buy something really expensive online. You see it, you think, that's a bit expensive, I've not been paid yet for my work, my job, whatever it may be. You can simply click pay with Affirm and then you can pay for the product in installments. Great system, very simple, and this payment method has been adopted by many prestigious customers of Affirm. So we've got Gucci, we've got Walmart, we've got Dyson, we've got Peloton, Shopify, and many, many more. So what's the link between a lot of their customers? Well, they've all benefited hugely from the global pandemic, as that has caused an acceleration in the adoption of online shopping. So before we dive into the business model and the juicy financials, let's talk a little bit about the founder. So the founder is Max Levchin. He was a co-founder of PayPal along with Elon Musk, very experienced guy in the fintech payment industry. So this is the right guy we need to be running this company. I also noticed he has some skin in the game as he owns a large portion of shares in the business, as does the rest of the board. So that's a tick for management and a tick for skin in the game. So what else makes this company so special? Well, the founder says many millennials and Gen Zs are frustrated by traditional banks and credit card companies because they're always charging people hidden fees, hidden charges. You pay for something, then suddenly you get these hidden charges and fees. It can be really annoying.
Answers. I want the truth! You can't handle the truth!
So Max says the new generation says no more. He says traditional banks have their business model in the fine print of their service, whereas Affirm is completely transparent and upfront about the payments and services it offers. So that is a unique thing in the financial world. But now let's dive into some key stats. The company currently has 6.2 million customers, 6,500 merchants, 64% from repeat customers, so people are coming back to the platform, 10.7 billion in gross merchandise volume, so that's how much is being pushed through the platform, 100% dollar-based merchant retention rate. So the merchants who actually use Affirm as a payment option, they're staying with the company. They're not changing to a different provider. They're not canceling it. They're staying with the company. So it must be working for them. So from 2019 to 2020, the gross merchandise volume has increased 77%. Now, the gross merchandise volume, as mentioned previously, is just the amount of transactions going through the platform. So it's not how much Affirm makes. But still, if more transactions are going through the platform, they take a small percent of every transaction. They're going to be making a hell of a lot more.
Look what I found in my pocket. Look. A year's salary right here. What I call them? Fun coupons.
Now I know what you may be thinking, buy now, pay later. Do people actually use that? Is this really a growing trend? Well, according to WorldPay's 2020 Global Payments Report, buy now, pay later is the fastest growing e-commerce payment method globally. In North America, buy now, pay later market share is expected to triple to 3% of the e-commerce payments market by 2023. In other regions such as EMEA, buy now, pay later already accounts for almost 6% of the e-commerce payments market and is expected to grow to almost 10% by 2023. So it's clear a lot of people are using buy now, pay later. And that makes complete sense. This is where everything is going. People no longer want to pay upfront for a phone or pay upfront for a car. People like it all on finance and credit. pay every month. It's just a lot simpler for people. It fits people's budgets so much better. The idea of this is to offer a delightful user experience. So it's a fast and straightforward experience with no hidden charges, hidden fees, and no hidden print. So what's the benefit for merchants really? Because of course, every transaction they're paying Affirm a percentage of that. So aren't they losing out? Well, according to Affirm's SEC filing, their merchant report increased customer conversion when they offer Affirm, and their dollar-based merchant retention rate has consistently exceeded 100%. So it seems a lot of these customers could be customers who would have simply filled up their shopping basket, realized they can't pay for what they want to buy, and then simply left the platform.
We're going to pop it in the Christmas box.
But I don't want a Christmas box.
But you said you wanted it gift wrapped.
I did, but
This is the final flourish.
can I just pay?
Whereas if they have Affirm integrated, this definitely gives the customer a flexible payment option. Affirm on average approves 20% more customers than comparable competitor products. So their system collects a vast amount of data. They have a great risk profile which can be created for each and every customer. Thus, their system seems a hell of a lot more accurate. So this solves affordability for customers by allowing customers to increase their average order volume, which is a great metric online retailers use. So this is their self-reinforcing competitive advantage. More customers, stronger ecosystem, more merchants, additional products, significant gross merchandise volume growth, deeper data insights, and creates a better experience for the customer. Win, win, win. If you guys are finding value in this video so far, feel free to give it a big thumbs up. That helps out tremendously with the channel because these videos do take a really long time to make. So let's dive a little bit deeper into the data advantage Affirm has. Data and train our model using machine learning from more than 7.5 million loans and 6 years of repayments. This allows Affirm's system to better estimate risk for the merchant, because let's say Affirm lets somebody pay later for a certain product or pay in installments over a period of time, but it doesn't estimate that customer's profile very well. It doesn't estimate that they're actually in a very unstable job or they don't have a job. Then that could be a real issue for merchants, because these merchants such as Walmart, Shopify, if they've got customers paying for products and services, but they can't meet the repayments because of their financial situation. But luckily, Affirm collects a vast amount of data. Their risk profile seems very, very accurate, and that helps merchants to select the right people who are eligible for this buy now, pay later, or to pay in installments. As of September 2020, over 6.2 million customers have trusted Affirm to help them pay over time. Okay, so the business model looks good, the management looks good. Now let's dive into those juicy financials. So the first metric we're going to look at is the revenues of the company. So these have seen a massive increase. So $264 million in 2019. That increased to $500 million in 2020, which is a 93% increase. Now generally I see a growth stock as one which is growing their revenues between 15 and 20% per year. 93%. Come on guys. Now before we get too excited, let's think about this logically. Could this be due to the fact that it's the global health crisis has caused an acceleration in the trend of shopping online, and thus many of their customers have benefited, and thus Affirm has benefited? That is a risk we need to take into account, and I'll discuss more about that in the risk section. What I like to see is the percentage of loan losses is also decreasing as a portion of revenue. So that's the second metric we're looking at here. So percentage of total revenue, credit losses, that is down from 30% in 2019 to 21%, which is great to see. Now, one thing must be stated, this company is operating at a loss. However, the net loss has been decreasing. So the net loss decreased to $112 million from $120 million for the fiscal year ending in June 2019. So that's great to see. Their losses is decreasing as their revenue is increasing, which is what we like to see. So what about the balance sheet? Does this company have enough cash to cover their debts? Well, the company has around $684 million in cash, so a substantial amount there. Funding debt here, $698 million. However, in terms of total assets, they have $2.2 billion in total assets. And also when they go public, they're going to be raising a heap load of cash. So their balance sheet looks pretty fine to me. And to top it all off, their transactions per active customer has increased from 2 to 2.1. So a nice little increase there. Now this is a very interesting company, but what about the risks? Well, firstly, they have a large portion of their revenue coming from a single customer. So that's the first risk I can see. The second risk I can see is competition. So there is quite a few players in this space. We've got Klarna, which is very popular in the UK. We've got ClearPay, Laybuy, and After. So many companies offer this service. Now, Affirm does say that their service is more accurate. However, it's difficult to clarify that exactly. The third risk I can see is we have to ask the question, has this company just benefited hugely from this global pandemic, as its merchants such as Peloton and Shopify have benefited massively, and thus Affirm has benefited by riding on the coattails of their merchants, which there's nothing wrong with doing.
Excellent.
But in the future, can they continue growing at the same pace that they have? That's what we need to ask. And finally, there's an elephant in the room, which I have to speak about. Amazon. So from looking at the customers of this company, it doesn't seem that they're partnered with Amazon at the moment. And to me, that's a major issue. Amazon is the global leader in e-commerce. Amazon is the giant of e-commerce. So the question is, will Amazon just create its own buy now, pay later platform? Or will it decide to partner with a company like Affirm? That's a question we need to ask. Personally, I think they could easily create their own version of this platform, as Jeff Bezos likes to be vertically integrated in the business. They want to own the entire supply chain. However, another option could be perhaps Amazon in the future could acquire a company such as Affirm. That could be quite an interesting development. They could easily acquire a company like this. Now, that would actually be a benefit to the shareholders of Affirm. So they're all interesting developments we can see coming up. But I'd love to hear your thoughts. What do you think of Affirm? Do you think they're underrated at the moment? And do you think their buy now, pay later is going to be absolutely massive? Comment those thoughts below and I'll try to respond to as many comments as possible. And if you guys haven't subscribed yet, feel free to join the investing community by hitting that subscribe button. And if you want to take things a step further, hit that first link in the description below and you'll be taken to the Patreon page where you can find out more details about the VIP membership group. This is a special group which I've launched just for you guys, and it gives you access to my buy and sell signals. So when I make my moves, you can make your moves, in addition to my entire investment portfolio, the stocks, and the story of how I built that portfolio from just $20,000 to over $200,000. So if you wish to check that out or just find out more details, first link in the description below, head over, watch the video and just see if it's for you. And don't worry, it's not some expensive course. I've seen a lot of people selling $5,000, $10,000 investing courses. It's the price of a coffee, and the amount of value you get is absolutely incredible. Don't believe me? Watch the video. With that being said, I hope you guys have a tremendous day, and I'll see you in my next video. Invest safe.